Nat gas prices, meantime, spiking ahead of this weekend's massive winter storm. Pippa Stevens is here with a check on the charts. And Pippa, what are people saying about it?
Well, Kelly, even by nat gas standards, it has been a pretty crazy few days, and nat gas is now up some 60% on the week and pacing for its best week on record. Now, this coming Arctic blast really caught the market off guard. You can see that prices were trading in a pretty tight range here and then started to drift higher on Tuesday before jumping as those weather forecasts really did start to shift. Now, there are three primary drivers. The first is covering. Winter had been pretty mild up until now, and short interest was at a 14-month, high, and so traders are closing out those positions. The second is demand. Freezing temperatures means people are cranking up the heat, and heating degree days, which is a proxy for nat gas demand, jumped from 8% above the 10-year average last week to now 35% above the 10-year average for this week. And that is a lot more power burn. And third is the fear of production freeze-offs. Now, key gas-producing regions, including the Marcellus and Utica shales in the Appalachian Basin, are forecast to get some negative temps, according to forecasts from AccuWeather. That can lead to pipes freezing and reduced supply. Down south, especially, equipment isn't always weatherized, and City estimates the production loss could be 80 BCF. Now, not all drillers have direct exposure to the jump in nat gas. One metric to look at when we do see this type of price spike is hedges. EQT, Range Resources, and Coterra are the most unhedged, that's according to Mizuho, meaning that they could potentially capture some of the upside from these prices.
So hedges are good or bad, or it depends on what's going on with the price action?
So it depends on what's going on with the price action, and it is very hard to tell because they can be for the month, for the week, for the year. But right now, EQT does have the lowest amount of production hedged for Q1, so that means that they could capture some of that upside from this spike. However, one thing to note here is that you also, if you are a supplier, you don't want to be caught off guard if your own equipment freezes. So sometimes we do see producers are reluctant to sell ahead of something like this, and so that can also make that market more tight and lead to the kind of price swings that we're seeing right now.
Makes it. How do you, Pippa? What do you walk all over Manhattan? Does this girl look like she had a baby like 2 days ago? It's fantastic.
Right back at you, and we'll be in the snow with those babies next week.
I need to get some shoveling calories burned. Pippa, thanks very much. Pippa Stevens.